Hello Sector Watchers, welcome to the show. This is the 183rd episode of Sector Spotlight for Monday, the 10th of July. My name is Julius the Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. And as you can see, the market has just opened on this Monday and we're kind of unchanged. S&P is up 10 bips and the Dow is up 48 bips. One important thing that I need to share with you, StockCharts has a summer sale going on, so when you are not a member yet and you'd like to subscribe, you can grab this opportunity, get a nice discount, or if you're an existing member, you can extend your membership and benefit from this sale yourself. Anyway, let's move into the rotations for markets, asset classes and sectors, and I like to start with a quick view of the rotations for the various asset classes. So here's the RRG, the weekly RRG for asset classes, and which has been going on for ages is that Bitcoin is way out of whack compared to the other items on this chart. You can see that it is still on the right hand side, so it's relatively strong, but it's a long tail and it's pointing towards the lagging quadrant. It's inside weakening, it's losing a bit of its downside momentum, but it still is. On the other hand, it's still very high on the RS ratio scale. We'll have a look at the Bitcoin chart in a little minute, but for the time being, this weekly chart basically says hold back. Not necessarily go short, but hold back. Let's take this off for now and magnify the other rotations, and they're still in line with what we've been seeing over the last few weeks, which is SPY stocks outperforming, moving into the leading quadrant, and all the fixed income related stuff inside the lagging quadrant and moving into that southwestern direction. Same goes for the commodity tails, which are now very clearly back into the lagging quadrant. And the US dollar has rolled over. It's improving, but it's losing relative momentum. We can have a look at the euro dollar chart in a minute, but the dollar strength that was there seems to be fading at the moment. If I do a quick change to a daily RRG for this universe, we can again see that the recent Bitcoin strength, and you can see how that very long tail sort of distorts all the other ones. That's because of the high volatility and the big moves that you see in that crypto stuff, has pushed Bitcoin all the way into lagging, but it's now also starting to lose momentum there. So you got Bitcoin inside weakening on the weekly RRG, and it's inside leading on the daily, but heading towards weakening. So I think that Bitcoin versus the US dollar is about to go into some sort of a pause if it's not already there. It's struggling with that 30K level. So maybe it needs a little bit more time to add some fuel to recover from that run to make that final push back above 30K. For now, I'm going to tick off this box here and fit everything on this RRG. And you get the same sort of picture, the same confirmation of what we saw on the other one, which is that the stocks are here inside weakening, but they're rotating back up. And we see that Gov and corporate bonds are already rolling over, and high yield is still pushing there, but it's a short tail. And the two commodity tails, GSG and DJP, which were on the far left on the weekly, are now back into the lagging quadrant as well. And here you see the little improvement of the US dollar that we've seen over the last few days, maybe weeks, is now starting to level off. That pace is leveling off. So given the price chart of euro dollar at the moment, I am not so sure whether this daily tail will make it all the way to leading. Only time will tell, but the combination of the weekly and the daily tails on the US dollar are not super strong. Let's take a quick look at some of the individual charts for these asset classes, and the first one is for SPY, and this is the daily chart for SPY. And as you can see, there's a nice negative divergence that's been built up between price and the RSI, and that's usually a sign for a little bit of a pause or a turnaround. Now with the breakout, the important break that we've seen a couple of weeks ago, I don't think this is going to be a massive turnaround, but it could absolutely put a little bit of a pause and a brakes on the recent rise that we've seen. If I make that a weekly chart for SPY, then you can see the difference. There's the divergence here is also showing up, albeit very, very minor. But you can see how after that break, this old high level here, which is around 425, 426, will very likely turn into a support area. And it could even go to 415 if you look at the magnitude of the higher highs, higher low series. Then for me personally, this is like one big move from this low here to the potential high that we've set here. I would consider that to be one move. In terms of level of magnitude of the lows that I am comparing, and then these are the highs that I'm comparing. So we've got 3 higher highs, we got 1, 2, 3, and then maybe a 4th higher low. That's the way I look at the interaction between that weekly and that daily chart. So for the near term, it's absolutely possible that we will see some easing of the move, but for the longer term, I think that the positive outlook for the S&P is still there, and we're still on track for a test of the 450 area in the S&P 500. I promised you the chart of Bitcoin, so let's look that up. Let's start with the euro dollar first. So euro dollar, where we saw that recent strength for, and just be careful, because when you look at euro dollar, when it goes down, it's strength for the US dollar. When it goes up, it's weakness for the US dollar. And you can see how this was strength, and now recently we see some weakness for the euro dollar. So euro dollar is on the way back to a challenge of maybe 110, or it could even be 111. And these are pretty crucial levels. This is all part of a very big major pattern that is forming, and it's to me not super clear yet where we are, but this is my biggest assumption was that this could be a big head and shoulders in the making. So getting out of this little correction to the upside is not necessarily confirming or encouraging such a big reversal pattern. So we need to be careful, especially when we go above 110. I'm gonna, throw off, and then we'll probably have to look for breaking 111, and it'll kind of flip the whole thing on its head. So we are still in a very crucial area for euro dollar, for the dollar in general, especially for the longer term outlook. Now let's go for Bitcoin. If we go to Bitcoin on a daily scale, then you can see how it's been trading between 31 and a half, 31,500, and on the downside it's 20, so let's say 30K. So there's about of a $1,500 range in Bitcoin. Here a very nice divergence, negative divergence also has built up, and you can see a sell signal and a MACD. That kind of suggests that Bitcoin right now is not ready to break out to the upside. So also here, if we break below these recent lows, 29.7, that'll most definitely or very likely kind of trigger a little bit more downside. Then we need a little bit more downside and room to breathe before we can attack that overhead resistance area. If it doesn't break, then I think that we'll see price moving inside that range until that divergence has been dissolved and there is enough fuel, enough buying power again for Bitcoin to rise above. And now that 31.5 is getting more of a pronounced resistance area. I've always been talking about 30K, but it looks like 31.5 is now becoming the more pronounced resistance level. And if we break that, that'll be a very good sign for Bitcoin. And if we bring that to the weekly chart for Bitcoin, then you can see how important that area is, and all of a sudden when you make that chart a bit longer, it sort of fades, and 30, 31.5, etc. It's all kind of the same area, but you can see how that pattern is still there, and we just need to wait for a push, a real push above that overhead resistance level. Let's move to the status of sector rotation for this week. On the left-hand side, I've got the relative rotation graph showing the rotation for the group of cyclical or offensive sectors, if you wish. And what you can see is that consumer discretionary, which is one of the largest sectors in the universe, but definitely the largest in this group, is nicely inside the leading quadrant and continues to move to the top right. The other sectors here, that's financials, materials and real estate, they're on the left-hand side, so that's the more negative side of the equation, but they're picking up relative momentum. Financials has already pushed into improving, and real estate and materials are following suit. So they're clearly behind the move that consumer discretionary is already showing us. But when you look at the daily RRG of this group of sectors, then you can see how it seems as if these three are taking over for consumer discretionary for the time being. So consumer discretionary has led the dance into the leading quadrant. It's now going through some sort of a setback and a correction. And you can see how real estate and financials are picking up, and materials is sort of in the middle. It's inside the leading quadrant, but is losing a bit of relative momentum, although it's still moving higher on the RS ratio scale. So the move on the daily RRG is definitely confirming the early stages of the move that we're seeing on the weekly. That means that this whole group of cyclical stuff is starting to get better and better, and that is usually a sign of a stronger market. So despite the maybe short-term kind of hesitant outlook that I just described for the S&P when I talked about asset classes, is kind of sort of, this is kind of short-term stuff. And what we see here under the hood is a rotation that goes more towards the growth and the cyclical sectors, and that is underscoring the longer-term strength, as I said it was in the S&P 500. So that's definitely a good thing. Let's take a look at a few of these charts. I want to look at the consumer discretionary chart, because that's obviously a massive sector here in this group. And when we look at consumer discretionary, we can see why it's hesitating. You can see how it's bumping into that overhead resistance area coming from mid-August 2022, almost a year ago, and it's around 170, 175. And you can see how the pace of that raw relative strength line is starting to get a slower angle, and that's what's causing those RRG lines to roll over, but they're nowhere near a decline yet. So I'm taking this as an intermediate setback, and I'm expecting the tail for consumer discretionary to actually rotate back up inside the weakening quadrant and get back into leading and be one of the stronger sectors in the universe. I'm going to take a look at the real estate sector, because that's moving right into that leading quadrant. So I want to see how that is actually doing. So here's real estate. And so here's the daily RRG. Let me get that back to weekly. Then we have apples and oranges. So you can see how that is inside lagging and starting to pick up. And you can see how real estate, the improvement that we saw on that daily RRG is because it's coming out of that falling channel and starting to slowly improve. But on the weekly, it's still very much in a downtrend. So we need to wait and see how strong that move is and how strong that move out of that falling channel can drive the relative strength upward. But it looks as if the worst part for real estate is over, and it's starting to improve, and it's in line with the behavior of the entire group of cyclical offensive sectors. Let's move to the group of defensive sectors, because out of the three groups that we have, offensive, defensive, and sensitive, the rotation in the group of defensive sectors, what you're looking at right now, is by far the strongest signal, because this is clearly sending us a message that money is rotating out of defensive sectors, and it's doing that for quite some time already. You've heard me say that money is rotating out of defensive sectors, and that process is ongoing. And if you just simply look at the performance table below, and that's giving you the performance over the last 10 weeks, you can see that the S&P went up 6.3%. And the performance of these defensive sectors are actually negative. All of them were negative. So that's a pretty big scissor move in terms of performance for defense versus the market as a whole. And we all know that when money is rotating out of defensive sectors, that's usually a sign for a stronger overall market, because investors move to defense when they're scared, when things are uncertain, and they want to get to some safe haven. And right now they're moving out of that safe haven to, as we just saw, offensive cyclical sectors, and we'll also see that they're doing that to a degree with the sensitive sectors. So let's get a quick look at the defensive sectors, because they are sending us the strongest signals, so to say. So here we have consumer staples, and you can see that the market is the price of consumer staples is moving sideways, and the relative strength is definitely still moving lower. If I look at healthcare, that's the other defensive sector, pretty big sector, you can see a similar image. The price is moving sideways, and when the market goes up and the price moves sideways for a sector, that's dragging the relative strength of that sector lower, it's moving it down. So that's very clearly an underperforming for the healthcare sector. And then finally, maybe the mother of all defensive sectors, that's utilities. And you can see here that it's sideways to a degree, but there is lower highs coming in place, which means that sellers are coming back to the market earlier. They're willing to say goodbye to their utility stocks at lower prices. And buyers are only coming in around that 63 area and a little spike to 60. So when that breaks, I expect more downside in utilities, but the relative strength is definitely going down. It's underperforming the S&P 500. So the story, the analysis, the judgment for sector rotation remains that money is rotating out of defensive sectors, and that should be a help to the market as a whole. And then finally, we have the what we call economically sensitive sectors. And you can see how communication services is moving into the weakening quadrant, but those of you who have watched the show more often know that we've picked up that communication services sector in a fairly early stage. We moved out of that bottoming formation. It was driving the communication services performance higher, strong outperformer, and that has come to an end right now. It was followed by technology, which is still doing a really good job. So these two sectors are still pretty strong in terms of relative strength, but both seem to go through a little bit of a hesitant period. And then we've got industrials really nicely picking up. And as I mentioned in last week's show, when we dealt with the monthly charts, the industrial sector is pushing to new all-time highs. And so far this month, XLRE has been managing, and the S&P 500 industrial sector index are both managing to hold above those all-time high levels, and they're pushing higher. So that's really a strong sign. And it looks as if the XLRE tail on the RRG and the relative strength that belongs to it continue to improve. And then finally, there is the energy sector, which is deep inside the lagging quadrant, making a little bit of a zigzag move and recently started to pick up. If I make this a daily chart for the sensitive sectors, then you can see how all of them are now starting to move back into a positive direction. Communication services seems to have ended its period of a pause. Industrials is now on the daily scale leading. Technology is going through weakening after it bumped against resistance, and it seems to be getting back. And energy is now really powering towards the leading quadrant. So this daily RRG for the sensitive sectors is actually showing a pretty strong picture. As a matter of fact, I just remind me that I didn't do that similar exercise for the defensive sectors. And what you see here is that they are all rotating back. So this is actually confirming that rotation out of defense. And if we have a quick look at the sectors here, then I want to have a quick look at those sectors because they are important. And let's start with the biggest one, that's technology, sorry. And you can see how technology is bumping against that all-time high level. It seems that it's gathering pace, picking up momentum, kind of recovering and refueling. And if this all continues and all goes well, then the next move will be above 175, 176, pushing to new all-time highs, and that will drag that tail, that daily tail, back into the leading quadrant and push that weekly tail higher. So the outlook for the technology sector definitely remains strong. We do a quick look at communication services. Then you see how that move is still there. There's that big head and shoulders formation that's been executed, and we're now moving higher on the back of that. First target I would still expect to come in somewhere around $70 for XLC. And you can see how the trend in that raw rate strength line keeps moving higher. RRG lines indicating a little pause. That's because that raw rate strength line has been moving sideways for the last couple of weeks. That means that the pace of the rally is slowing down, but it's still moving higher, so that's a good thing. And you can see how the shorter term is already picking up. Let's quickly move to XLRE, that's the industrial sector, the sector that is moving to new all-time highs, and you can see that right here. The all-time high level was somewhere here, about 106 over the last 3 weeks. We're already holding up above that breakout level, and that's starting to take an effect on the relative strength, and it's starting to pick up. RS momentum is already pushed above on the weekly RRG, and you can see how the daily is pushing further into the leading quadrant. So I expect further improvement for the industrial sector in the coming weeks. And then finally, there's the energy sector. And you can see how the daily is picking really up here. On the weekly, we're still moving sideways. We have some higher lows coming on, but I don't think it's a real triangle because we're missing this low here. But the downtrend in relative strength is still there. The daily is pretty strong, but if I look at the weekly, then that is still, that needs a lot of work. It's right here, so I doubt whether the energy sector will be as strong as industrials, communication services, or technology. But nevertheless, even in this group of economically sensitive sectors, 3 out of 4 are actually doing really well. So all in all, with the offensive sectors picking up, the sensitive sectors picking up, apart from energy, and more importantly, the defensive sectors continuing to show rotation out of that group, sort of underscores the underlying strength for the stock market as a whole. I want to leave it at this for this episode of Sector Spotlight. I am planning to do a quick special, hopefully later this week, on the use of some special benchmarks. I got some mailbag questions on the subject, and instead of putting it in a show that is quite time sensitive, I'm going to make that a separate Sector Spotlight special, which we can just air whenever we like, and I can tell people when they write in a new question, I can just point them to that specific show of Sector Spotlight where I talk about the use of different benchmarks and how to construct them. For now, thanks for watching Sector Spotlight this week. I hope you enjoyed the show. Please let us know. Thumbs up, always great. If you've got questions for the mailbag, don't hesitate. You got my contact details. And other than that, I'm really looking forward to seeing you again at a new episode of Sector Spotlight next week, same time, same place.